Hello and welcome to my channel. So in this video, I'll be teaching on how to start your Forex trading journey as a beginner. And I want you to be attentive as I will be covering a lot of topics that will give you the basic foundation that you need to start your Forex trading journey. And these basics are Forex market analysis, because everything that you do in Forex trading has to do with you analyzing markets, okay? That would help you to make your decision on whether to buy or sell and when to buy or sell. And in that analysis, I'll be talking about trend. I'll be talking about types of analysis that we have. I'll be talking about type of technical analysis that we have. Then I'll also be teaching on how to understand the price chart and its usage, okay? And how to read Japanese candlestick. So all of this I'll be talking about in this particular video. So I want you to please relax and watch this video to the end, as every point that I'll be making in this video is very, very important for you to be a successful Forex trader.
Yes. So what are those basic foundation or basic things that you need to know before you can dive into the Forex market and be profitable? Because the Forex market goes beyond just seeing a bullish candle, you click buy, and you see a bearish candle and then click sell. No, it goes beyond that. So if you want to be successful in Forex market or as a Forex trader, you need to have that deep knowledge of Forex market analysis. Forex market analysis is the process of predicting the market direction, otherwise known as trend. So with this, you are able to know whether a financial instrument is going up or down, strong or weak, in order for you to make your trading decision on whether to buy or sell and at what price. You don't just dive in or jump into a market like that and begin to click for buy or sell. You need to know the direction first, which we usually call trend. And again, you need to know at what price should you buy. That is very, very important, because your intention of going into the Forex market is to make profit. You buy low, you sell high. That is it. That is how you can, be successful in this game. Okay, like for example, now let's say I want to make a decision on whether to buy or sell GBP USD. So what do I need to do? The first thing I need to do is to know the direction. What is the trend? What is the direction GBP USD is going? Is it going down? Is it going up? Is it strong? Is it weak? So all those questions, you need to answer them first before you can click a buy or sell button. So now, having said that, because it is very, very important that we know this, because I've seen someone before that just register with a broker and begin to trade. Anytime you see candle moving up, he click buy. Anytime you see candle coming down, he clicks sell, and he keep wasting his money. You understand? So you can't trade like that. You can't trade Forex market like that. You need to have proper understanding, a deep knowledge, the basic foundation of Forex analysis before you can, trade Forex. Okay. So now there are two ways you can analyze the market. You can either analyze the market with your technical analysis or the fundamental analysis. So in technical analysis, what do you do? The technical analysis is used to forecast the future price movements of a financial instrument or an asset using price charts. Look at my screen now. So what you are seeing there now is a chart, okay, that you use to analyze a financial instrument for you to be able to generate a buy or sell signal. In technical analysis, I will first of all deal with the technical analysis, which is going to be our major focus before going to the fundamental. Okay, so there are two techniques, by which you can achieve this. I mean the technical analysis. So the number one is price action. You can use price action techniques, or you can use the what we call technical indicator, technical indicators. So the price action is used to forecast the future behavior and price of an instrument using pure price movements and patterns to generate trade signals for entry and exit without using indicators. For example, now, the one you are seeing on my screen right now. But the other one, with the use of technical indicators. So technical indicators, they are tools, programmed to automatically predict market future behavior and price using historical data, okay, in order to generate buy or sell trading signals through trend, momentum, volatility, and order and volume. So we have various indicators that you can use to generate your buy and sell signal. Those indicators have been programmed by some people, by programmers, based on some people's experience. Okay, so they have programmed some people's experience, for you to be able to generate your buy or sell signals in the forex market. We have many of those indicators. There are some that are trend following indicators, that will be able to tell you the trend of the market, direction of the market. There are some of them that will tell you the momentum, of the market. There are some that will tell you about the volatility, and there are some that will tell you the volume. Having said that, for the fundamental analysis, this focus on the overall state of the economy of a country using some fundamentals such as interest rates, employment rates, GDP, manufacturing, and so on and so forth, to generate a buy or sell signals for an instrument. Like, for example, now, if you want to trade any financial instruments, let's say USDJPY now, USDJPY, that means you need to have the understanding of the economy or what is happening in those countries. There are some fundamentals that you need to know, things you need to know, some fundamental factors that you need to know concerning the economy of those of the country of those currency pairs you want to trade. You need to listen, or read the economic fundamentals concerning their GDP, the employment rate, the interest rate of United States or the Japanese yen. What are the things that is happening in those two countries? You need to have perfect understanding before you can enter a buy or sell. So that is the use of fundamentals. That is the only way you can generate your buy or sell, signals. Quickly, I would like to discuss about the two types of charts. Okay, we are talking about analysis. So now for the technical analysis, now, like I told you, we're going to be focusing majorly on technical analysis. So now, for you to analyze the forex market using technical analysis, you need to understand what we call charts. Okay, you need to understand the price charts, and there are two major types of price charts that we use. One of them is the Japanese candle chart, the one you are seeing on my screen right now. That is the Japanese candle chart. Okay, and the second one is line chart. So I'm going to show you the line chart. This is the line chart. So the line chart will show you the highs and the lows of the forex market. Like, for example, you can see the highs here, the lows. It will show you the price, the movement of the price with their opening and closing. Okay, the highs and lows, the closing. Like, for example, now this is the high and the close of this market. This is the low and close of this. This is another high. This is another low. So that is what that one will indicate. So you can, with that, you'll be able to get your key levels from where you can enter the market. Okay, but with the Japanese chart, price chart. That one gives more information than the line chart. So that is why majority of traders use the Japanese candle chart, because it provides more information. And what are the information that you can get from the Japanese candle chart? To show you the high, okay, to show you the low of the market, then the close and the open. What do I mean by that? Let me zoom in so that you'll be able to see what I'm talking about. Like if you can see this green candle clearly, you can see the high. The high is here, where my cursor is. That is a high. That shows that the price has gone as far as, as that level before closing at this level here. This is the high, this is the close. This is the open of this candle, and it has gone as low as this place before continuing up, the movement up. Okay, there are some information that the candle, there are two types of candle we have. We have the bullish candle, Japanese candle, and we have the bearish. The bullish is the green one that shows you the upward movement of the price, while the bearish is this red that shows you the downward movement of the price. Okay, one shows you the upward movement, that is this price, the price of this asset is moving up, or the downward, that the red one shows you the price of this instrument or this asset is coming down. So either you use the word weak or strong, strong or weak, going up strong, coming down weak, or you use the word bullish or bearish. When you see a candle moving up like this, green candle, we call it a bullish candle. That means the price is going up. Then when you see a red one like this coming down, this red one means bearish candle. Okay, so bearish candle. So a bullish candle will start, with an open from here, then it closes at the top like this green. Now this is the open of this price of this candle. Then this wick, we call this wick, the wick of the candle. That thin line is called the wick of the candle. It shows us that this particular price has come down to this point before continuing up. That is what the wick, the information that wick is telling you, that the price of this particular market has come down as low as the wick of this before moving up. So this is where the candle opens. This is where it has gone as low as this before it continued to move up. Then it closed at this top here. I hope you can see my my cursor. Then it closed. This is the close. Okay, the body, we call this place body, the opening of the body, the close of the body. Then this candle is also telling us that the price on this particular candle has gone as far as this place at this top here, that wick, the upper wick. Okay, it has gone as far as this place before coming down. Okay, it has gone as far as 110.088 before closing at 109.645. Okay, so those are the information that the Japanese candle will give you, and those are the things that you will use in your forex market analysis. The second one, which is the bearish, I just explained the bullish candle now. Then this is the bearish. Let me use this one as an example for the bearish candle. But like the bearish candle now, if you want to analyze this bearish candle, this color red is the body of this bearish candle. This color red is the body of this bearish candle, and it is the opposite of the bullish. The beginning of the bearish candle is from the top, while the end is bottom. But for the bullish, the beginning is the bottom, while the end is where it will end at the top. So like for this one now, for this bearish candle now, which shows that this the price is falling. So the opening of the price for this one is here at 110.792. 110.792. This is the opening. You can see this is the opening here. You can see my cursor. This is the opening of this candle, and down here is the close. This is where it closed at this price at 106.356. This is where it closed. But there are other information that this candle is still telling us, that is, aside that the candle opened from here, okay, before continuing the downward movement, it has first of all tested this wick. So this wick here shows that the price has gone up as far as this level before continuing downwards. So in our practical analysis, you will understand how to use all those things, the wicks, the body of the candle, the width of the candle, and all that. So it shows that this wick shows us that the candle has gone as high as this place before continuing downward. If you see the small wick here as well, you can see there is a small wick here, and if you can't see that, then let me use this next bearish one. You can see this wick here shows that this price has come as low as this line, as the end of that wick before it closes at this price. Okay, this is the open here, this is the close. Okay, this is the lower wick, and this is the upper wick. The lower wick shows that this price has gone as low as this place before closing at this price. The upper wick means this price has gone as high or as higher as this place before opening, before continuing downward. This is the open, this is the close, this is the high, this is the low. So with that explanation, I believe you have the perfect understanding of what a candle is. For price action techniques, those are the things that you're going to be using to analyze the Forex market. Okay, so in order to be profitable in Forex markets, there is need for you to have proper and deep understanding of this basic foundation of Forex market analysis. If you don't have this basic foundation, you can't go anywhere. You can't go anywhere. You can't be successful in the Forex market. And the next video will be talking about the demand and supply, the support and resistance. We'll be talking about using Fibonacci to get your key supports and resistance levels. We'll be talking about trend lines, chart patterns and all that. So remember, the whole essence of analyzing the Forex market is for you to be able to generate an accurate buy or sell signals. That is, for you to be able to know when to buy and when to sell and at what price. That is the whole essence of what I've been talking about. Thank you for watching this video.